Hello and welcome to this June 2nd, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Concho Resources, ticker symbol CXO. This is a multi-billion-dollar basic materials company. Taking a look at the chart, you can see back at the end of April, CXO was making this straight up move. Actually a couple of problems. First, on this move up, notice the volume. It was just kind of okay. Each time we were making the breakout toward the end of April, we were doing it with just kind of average volume, nothing spectacular. That was one warning sign. Another warning sign, perhaps a bigger one, was as we were making these new highs. Take a look at the MACD, which had actually fallen back. We had 3 consecutive highs with 3 consecutive lower MACD readings. That long-term negative divergence also was sending a signal of slowing momentum, and as a result you can see that we went through some pretty steep selling in early May. Came down below the 50-day, went back up above the 50-day on declining volume. Check out the volume lessening as we made this move to the upside. Came back down on heavy volume, and then just recently came back up on lesser volume once again. A problem I have with this stock in particular was the action on on Tuesday. You can see that CXO had moved up intraday, moving above $54. The high was actually $54.16. We were breaking out above this downtrend line. We were breaking out above the 50-day moving average. It looked like CXO was going to potentially make another run for the recent highs back up above $58, but then a strange thing happened. We actually had to see a close, and CXO was very weak in the afternoon. You can see the heavy volume reversal. We moved up, like I said, intraday to over 54, but with the 50-day moving average sitting at 52.53, we could not hang on to that, instead closing back at 51.92. So off of this move to the upside, which relieved some oversold conditions, this was a failure at a very significant resistance point, both the trend line resistance and the 50-day moving average. So not very good action technically on CXO on Tuesday. I would expect to see the stock pull back off of this type of a candlestick to the upside. We always want to make sure we have our stops in play. I'd be careful around $53. If we get a close over 53, especially if it's on heavy volume, then you might want to consider taking an exit and a small loss on CXO. However, if this truly does mark an intermediate term top or even just a short term top, I think moving back lower, we could potentially move all the way back down to test the recent lows down near $45. So pretty nice move indeed, certainly with the type of reward to risk that we like. Mentioning the RSI here, you can see normally in an uptrending market like we had back earlier in 2010, you can see how 40 to 50 tends to hold as support on RSI. But notice when we broke below 40 just recently, we came back up, we failed to get through 60, moved down again, and now we're in this range of RSI in the 50 to 60 area where stocks tend to struggle when they're in downtrends. So there's a lot going against the stock in the near term, and I would expect that we'll see a little bit of a pullback. But again, if not, keep stops in play. $53 is an area that I would certainly keep an eye on. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.